Online. Tracks FM.
Good morning, Malaysia. Otto here, coming to you live from Angkasa Puri, Kuala Lumpur. It's the 24th of November on a Thursday. Hope you're having a wonderful day so far. We are also currently live on Facebook Live at Tracks FM Official. So head over there at TRAXXFM OFFICIAL. Remember to share, like, and also comment if you feel like it. And today we're talking about the Malaysian economy post GE15. And today joining us, we have Associate Professor Nuradli Ridzwan Shah, Faculty of Economics and Muamalat, Universiti Sains Islam Malaysia, online right now. Good morning, Professor.
Good morning. How are you, Otto?
I'm fine. Thank you so much for joining us once again. I hope you're in good spirits today.
Yeah. Okay. Very good. Yeah.
Oh my goodness. Since that we had the post GE15 topic for today, I would just like to straight up ask you, the just concluded 15th general election, or GE15, has brought Malaysia to uncharted waters with the hung parliament. So wherein neither coalition crossed the indispensable line of 112 simple majorities to form the next government independently. What is your thoughts on that?
Well, basically, if we have that, we call it hung parliament, right? So basically, it's actually giving some uncertainty issues towards the market participants, for example, the stock market, and also the investors. Because we are looking at the possible policies that will be implemented and also will be planned and also implemented by the new government. But however, since we do not have the simple majority, so we need to wait for maybe some parties will be collaborating with each other in order to form the government. So it provides some uncertainties towards the overall economy, but we will have to wait for, I think, probably in the afternoon, right, also?
Yes, most probably, because we see a lot of uncertainties right now, a lot of possibilities as well. I do believe that we will definitely pull through this altogether, no matter what. But we'll just have to wait and see. But anyway, Malaysia's economy is strong. But will the current scenario affect investor sentiment? With that be the case for now?
Well, there will be we call it an immediate reaction, right? So we can see that for the 2 days after the we see that the market, for example, the stock market have been trading in the negative region. However, today we see that there is a positive sentiment for the stock market. So it will be like some immediate reaction, but this is not actually like the previous election, where we can see that the market reacted negatively towards the outcome of the election. So I believe that the market will be on track after the government has been appointed by the Yang di-Pertuan Agong.
From my perspective as well, we saw from the first day of after the GE15, we saw that the market just drop sometimes and then rise up again. This is one of the reasons why we must have a stable government, and we need it very fast as possible. Now,
carry on. Yeah.
Okay, so will the investor adopt a wait-and-see attitude until a new government is formed based on that?
Well, yes, probably they will actually wait for the new government to be appointed. And then, because they really want to know, what type of government will be holding the position, and also the rules and regulation, the business impacts, and also to the consumer, because the policies that will be formulated will be really affecting their investment decision. So probably now they will still wait and see, and then probably they also will have to wait some time after the government has been formed to see what will be the direction of the new government.
Is it usually the case whereby before a government is formed, they have their policies ready-made for that particular purpose? Like, in your opinion, where can we find actually common ground in policies, people, and also the economy?
Well, we are actually a ethnic country, so we have different people from different ethnic, different religion. But if we want to find the common ground, so probably we have to look into certain policies that will be formulated towards health, right, towards education, towards economy, and also towards social. So this is the focus of the new government. If they are trying to find the common grounds between the different ethnics of Malaysian society. So education, health, economy, and also social. So that will be the 4 points that might be having the same common ground between the Chinese, Indian, and also the Malays.
Now, if you've just tuned in right now, we're talking to Associate Professor Nuradli Ridzwan Shah. He's a faculty of Economics and Muamalat, Universiti Sains, Islam, Malaysia. We're talking about the Malaysian economy post-GE15. Now, before we break, I would like to ask, it was said that GE15 results bring more uncertainty to financial markets. Now, what is your opinion on this, and to what extent and how long will it last?
Well, I'm going to say, yes, it will affect the financial market. So you look at the stock market, for example, it moves, ups and down, right? So basically, but that is actually based on the market or participant reactions, right? Because we are human beings, we have emotional attached towards our investment. So in the event of the G15, so we have this, we call it the state of great fear or great greedy, right? So that's the thing, okay? So basically, it is actually having some jigsaw, but in the long run, I believe that the market will be actually going up because our long-term trend is actually going upward rather than downward.
Oh, that's great news. But all right, so we're going to take a short break right now. We're talking to Associate Professor Nuradli Ridzwan Shah, Faculty of Economics and Muamalat from Universiti Sains Islam Malaysia, talking about Malaysian economy post GE15. Now we'll be right back with a good professor right here on Trax FM. So stick around.
You got it locked on the best radio station.
Trax FM.
On air. Online. Trax FM.
Good morning, Malaysia. Otto here, coming to you live from Angkasa Puri, Kuala Lumpur, and we're talking about Malaysian economy post GE15. We are also live on Facebook at Trax FM Official. If you want to know what we're talking about, it's practically that, Malaysian economy post GE15. And today we are joined with Associate Professor Nuradli Ridzwan Shah, Faculty of Economics and Muamalat from Universiti Sains Islam Malaysia. Once again, good morning, Professor.
Hey, good morning.
All right, so with Malaysia's new administration will face a mammoth task of strengthening recovery, maintaining economic momentum, and also stabilizing the political environment amid external headwinds, which include a potential global recessionary in 2023, as predicted by market observers. Now, how severe is the projection, and how long do we expect this to last?
All right, so this is a very tough question. Okay, So basically, if you look at the global scenario, okay, we are not talking only about Malaysia. So we're talking about the global scenario. If we look at US, they are facing with high inflation, right? High inflation, about 8.2%, and also the economic growth is actually grow at a slower pace. So in terms of when we have what we call it slow economic growth and also high inflation, then we call it probably we will have like a stagflation or a recession, right? So in the scenario of if America is actually having that problem, so it will also affect the other countries around the globe. So if you are asking me how severe is the projection and how long you expect this to last, it can actually last from 1 to 2 years, okay, depending on the severity of the recessionary period. So I believe that even though that U.S. will be facing that problem, okay, But looking at our economic indicators for Malaysia, so we are better off than the US, except that our currency has been depreciating from since September this year. So this is because of the Federal Reserve of the United States of America. They have been increasing their Federal Reserve rate for 6 times already in this year. So if you refer to the increment, there are 4 times that the United States has increased their Federal Reserve rate by 75 basis points. So their rate at the moment is about 4%. Okay, 4% is around from 3.75 to 4.25. So basically about 4%. Right? As compared to Malaysia, our OPR is only 2.75. So that's why you see that when there is a difference in the, we call it interest rate, okay, between two countries, okay, you can see that some of the capital, okay, might be going to the country that actually having higher rate of return compared to the other country. So at the moment, yes, we are facing quite big challenge, okay, especially when the whole world is actually facing the risk of recession, but our economic indicators are in the good right now.
I would say that even in a nutshell, seeing that Malaysia is not dependent to other countries as well, not that much, we can see that our economy is still stable as of that. Would you agree?
Yeah.
Now, with regards to the political stability, has helped actually Malaysia's economic growth and recovery from financial crisis since the country's independence in 1957. Now, the nation's gross domestic product, or GDP, growth has reportedly been on an upward trajectory since 1961. Now, Malaysia was one of 12 low-income countries with a 6% average annual economic growth rate. So this has reduced the income gap and also aided the socio-economic development of the nation. However, the COVID-19 pandemic and also the political unrest from the year of 2020's beginning led to the dramatic decline in Malaysia's GDP, which fell about 5.6%, if I'm not mistaken, that year. So, what is your impact towards the Malaysian economy?
Well, we look at the growth from our independence in 1957. It has been growing tremendously. Yes, we started from a low-income country, then we become a developing country, and we are moving towards to become a high-income nation. Right. So basically, we are progressing, and then also, as you mentioned, that we have tried to reduce income inequality between different races and so on. But as you can see that we have this, we call it the problem of COVID-19 pandemic in 2021, and also from the election of, so we have some problem in terms of economy. And also, if you look at during the pandemic COVID-19, some of our M40 or maybe T20 also fall into the B40 categories because of the unemployment rate. But if you look at the data, now the employment rate is actually has reduced by 0.9%, so which is good, okay, in that case. So basically, in terms of having an ups and downs in the economy, it's actually a part of, some people say it's actually a part of an economic cycle. So we have at times whereby the economy grow very strong, and then there are times when the economy is actually taking a break for a while, or making a correction. So some actually say that this is like the we call it the reset, economy reset. So you are growing, then you have to go and do some correction, then you grow again. So that is actually the life cycle of an economy. So I believe, okay, in the long run, so we will still be growing, okay, and tremendously. And this economic crisis or economic, we call it downward, is actually temporary, and we will actually move forward in the future.
Now, Professor, we're talking to Associate Professor Nuradli Ridzwan Shah. He's from the Faculty of Economics and Muamalat from Universiti Sains Islam Malaysia. We're talking about Malaysian economy post GE50. Now, Professor, World Bank predicts that the global economy will increase by only 2.9% compared to 5.7% last year. Now, this year's growth is expected to be weaker, according to the Organization for Economic Cooperation and Development. In the following 2 years, the world economy is predicted to expand at 3% yearly, which is not too different from this year. And the forecast is based on the number of variables, including the conflict between Ukraine and Russia, intensifying inflationary pressures. And the crisis is rising living costs as well. But what does Malaysia's economy stand to gain or lose from the predicted rate of global growth?
If the economists predicted that we will be growing at a very slow rate, right? Basically about 3% per annum. So this is actually not really good, okay, in terms of economic growth. However, our performance in the third quarter for our GDP has increased by 14.2%, which is a very, very good number as compared to our neighboring countries, right? So even though we are performing well in terms of our previous quarter, but I do agree that with the problem with the world recession, or we are facing recession, you can say that we might be facing what I call it a pressure of rising costs. Okay, rising costs, which means that our prices of goods and services will increase probably in the next year, because we are also, as we know, that we are actually a net importer for our commodity goods. For example, we have to import wheat, we have to import meat, and so on. So this is a necessity for us. So we need to eat, we need to use that product as our ingredient of our food, right? So in that case, we can see that there will be a pressure from rising prices. This is the thing that might not be really good for us, right? Because we have to pay more for the same goods that we used to pay cheaper previously. So in terms of rising costs, that will be the main challenge for our future. And at the same time, because we are also growing tremendously, I can say that 14.2% last quarter, which is a good number. This is actually a good sign for Malaysia, right? Because as I mentioned before, that the other neighboring countries, the GDP is not as growing as us. So they are very, very slow at the moment. So if we can maintain our momentum in growing, then probably we will actually having a lesser impact in terms of the world recession, right? So because even though we have a higher rising cost, but at the same time we have a higher GDP growth, that will be probably better off than the other countries. Will be facing a lot of trouble in terms of facing the rising costs and also very slow pace of economic growth. So I believe that that too would be sufficient for us.
I'm quite surprised as well. Our GDP is 14.2%, which is very good in terms of our economic stability. But yeah, sometimes our the global effect also does spill into Malaysia, like what you said, the import of, like, say, meat and also wheat. Yes. Yeah, it's also a factor why cost of living is also rising because of certain imports. But so far, our GDP is very good. I guess it all depends on the policies as well, which if the new government is formed, then we'll know what is the next policy and we can predict how our economy will grow and stand against the global situation when it comes to the economy. Now, where do investors tend to lean when choosing between political stability and appealing investment opportunities?
Well, this is actually something that must go hand in hand between political stability and also investment opportunities. So if you look at the investors, definitely they want to have a country which is very stable in terms of politics. Okay, they don't want to be investing in a country and then in the middle of for example, 2 or 3 years, then there will be a change of whatever happened, which is because of political instability. So both must go hand in hand. So, for example, appealing investment opportunity, even though, for example, in terms of Malaysia, right? So we have this problem of having lower interest rate as compared to the US just now. Okay, US might be increasing their interest rate to 5%, right? To 5%, and our probably our government will only increase to the highest that we have been facing was 3.5%, right? So if as an investor, definitely we will choose the 5%, right? The 5%. But if the government can actually attract the investors by giving good policies to the investors, it might actually attract the investors to invest in Malaysia. For example, having tariff, okay, having tax incentive and so on.
Mm-hmm.
So this is the thing that probably might be, we are still looking forward for the new policies that might be appealing to the investors to come and invest in Malaysia.
Yeah, it all depends on the new government which forms the new policy and all that. Totally agree. Now, in your opinion, will there be a retabling of the budget 2023?
It might be. Probably, yeah. There might be a change in the, budget. If there is no change, they don't have to table it again, but they will just need to be to pass it, okay, in the parliament.
Mm-hmm.
However, if there is a lot of changes or there is a lot of the changes, they might be retabling again the budget for 2023, and then it has to be passed in the parliament. So there will be probability of yes and also no.
It's still a guessing game for everybody, right? We do not know if it's going to be an amendment or is it going to be added or maybe withdrawn certain policies. So it's all about a waiting game right now. I totally agree, definitely. Now, if you just tuned in, we're talking to Associate Professor Nuradli Ridzwan Shah from Faculty of Economics and Muamalat from Universiti Sains Islam Malaysia. We're talking about the Malaysian economy post GE15. Now, before we let you go, Professor, do you have anything else you'd like to add?
Probably if we I would like to say something like this, probably if we are facing the global recession, we might be needing to have some emergency fund for us to be ready or to be prepared for the recession if it happens. Okay, so 6 month emergency fund should be sufficient, okay, for us. And then also we have to maybe, because we can see that the rate might be increasing, okay, more in the future. So probably we have to postpone, okay, from buying big expenses or taking big loans, okay, so that it might not. We have to see how we actually can manage the expenses, especially for the financing part.
All right. Thank you so much, Professor. Okay. Thank you so much for your insight on that. And yes, I do agree. It all depends on the policy and how we are going to bounce back from any situation. But the good thing, the upside is that you did mention that our GDP is 14.2% increased. So I think that's good enough. So thank you so much, Professor, for joining us. And we'll catch you in some other time, but we'll sure be in touch pretty soon. Yeah. Thank you so much, Professor.
Sure. Thank you so much. Okay. Bye-bye.
All right, so that was Associate Professor Nuradli Ridzwan Shah from Faculty of Economics and Muamalat, Universiti Sains Islam Malaysia, or USIM, talking about Malaysian economy post GE15. So no worries over there. Our economy is stable. It's just that we have to see how the policies is going to help us in the near future. And if there's any added one, we'll just have to wait and see what happens. Yeah. All right. So we're going to get a short break and we'll be right back right here on Tracks. Stick around.
Feel good radio station. Make me feel good. Anywhere, anytime. Tracks FM.